Let me ask you about China, because this is the trade fight that is really the subject of the day, certainly for this administration. Has it impacted your business, the trade fight with China?
Yeah, not directly. So first of all, the trade fight, there are legitimate complaints about trade with China, which have been laid out in excruciating detail by the administration. I think the Chinese understand that, by the way. I think it's important we fix that. All the business people I know say it's got to be fixed. I think we have generally the support of Japan and Europe in fixing it. So we need to do this. You can argue how it gets done, but it does. So it doesn't directly affect us, but it affects our clients. So if you look at 100 companies, some are highly affected and some aren't affected at all. That's why you see all this different news. Some people say it's changing everything. It does change supply chains, confidence. I think it's causing some of the volatility you see in the marketplace. And certain people have to hold back decisions, because if you're going to build something and you don't know what the trade deal is going to be with Mexico, China, Vietnam, et cetera, you may wait. So I do think it kind of slows down some types of capital investment over time. But we do need to face the issue.
You've had an incredible 10 years, 20 years at JPM in terms of market share, the leader in the industry, and yet the competitive landscape is changing as a result of the rising of China. Yeah. What's your take on that? I mean, I don't think people are worried about Chinese banks coming in and stealing your customers in America, but what about the global marketplace? The Chinese banks want that market share, and we have a new report out that says the top 5 global banks are Chinese. 13 of the top 50 are Chinese.
Yeah. So years ago, I wrote about the Chinese competition in my chairman's letter about they're coming. And Dick Cheney actually called me and said, "What are you complaining about that for? You really mean it?" I said, "Yeah, I mean it." So those banks you're talking about now earn almost twice as much money as us. In terms of assets, not better than we are, but in terms of assets, they're twice the size. They have a huge home market. They have a strategic reason to go overseas, i.e. to serve Chinese companies overseas. They will be huge competition for us. And so I do think that's legitimate. But again, you know me, we're going to have competition from everywhere. Whether it's big Chinese banks or successful banks here, recovery banks there, or fintech companies, there's going to be competition. So my job is to do the best I can for my company, knowing it's coming, whether it's from the Chinese or not. What's very important when it comes to Chinese competition is that we not be hamstrung in competing with the Chinese. So certain American regulations, I'm not complaining about it, make it harder for us to compete with the Chinese. And I do think at one point the regulators should say that we don't want to put a JPMorgan or any other American bank in a position where it's disadvantaged.
No, you can't go to China and open up a bank and own it out and out, right?
No, we've applied for a license, and I still hope when all this stuff gets settled that we actually get a license and can build, 100% owned major investment bank. They do everything we can do in Hong Kong, London, Singapore, New York, that we can do in Shanghai effectively.
But right now, you're going to have to go in as a joint venture, 49% owned, right?
Yeah, we have limited ability in what we can do there. Yeah. But the Chinese have told us that they are going to open up. This is one of the things that people complain about. They have all these industries they have not opened up. They've said publicly, and so I'm not making this up, they've said it to individuals, companies, that they're going to start opening up those companies soon. So in fact, I know of companies that got their license. So they are actually doing some of that today.
Okay.
Right. Not banks, non-banks, but other companies.
Yeah, there are certain industries that are deemed off limits. Yeah. What about the rest of the world? I mean, I think Apple had an issue recently because of weakness in the emerging markets. You also have, obviously, slowing in Europe. Would you consider buying a lender in Europe?
No.
Why not?
There's no reason for us to buy a lender in Europe. I mean, if you said to me, I want to serve my European clients, remember, there we do corporate investment banking, asset management. I would add salespeople, systems, ops, capability. I do not need to buy another lender. Mergers are very difficult. They're difficult on people. You have to consolidate systems and cultures, and you have to de-risk it. It's complicated. I'd rather just grow organically.
So how do you grow organically? You've had an incredible run in terms of being the leader in the industry, market share gains, even this last year, incredible market share gains when others were falling short. How do you keep that growth going?
Yeah. So internationally, we look at country by country. We look at the growth in the population, the education, the wealth, the markets. McKinsey did a great report a couple of years ago that how many billion-dollar revenue companies there are. It's going to go from like 8,000 to 15,000. You can almost do it country by country. So you can kind of say which are our set, who we want to cover. And then we cover bankers and all the support that means, credit, legal, risk, compliance, HR, real estate, to support that business in a country. So we do that literally country by country. In the United States, in retail, we announced we're opening 400 branches. So we've already opened our first in Boston, D.C., soon in Philadelphia. And we go in, we do small business lending stuff, so 400 branches. And then maybe after that, another 400. So we'll have organic growth. And then I didn't bring my phone, but you can buy and sell stock for free on UInvest. So if you are a Sapphire banking account, You can buy and sell stock for free. And it may not be the best product out there, but we're going to make it better every day, so that we're giving our clients more things to increase their satisfaction while they should bank with us.
I'm really glad you brought that up, because Zelle has been in the market for a long time, where you could transfer money from person to person, right?
Yeah.
And that's a JPMorgan product.
Yeah, so as a management, we always look at things we did wrong. I mean, the banking industry should have done something like Zelle years ago. So we had something called Chase QuickPay, and the banks were able to move money in the bank, so I can move money to you if you were a Chase account. But obviously, if you're going to move money, like you're going to compete with a Venmo or other folks out there, you better move to everybody. So the banks built a system, which is open to all banks now, that you basically have to build a little software to be part of, so you can move money real time using your phone number or your email, and automatically link it to your account, so I can move money real time, safely, securely, and it's great. It's big, it's growing rapidly, and I think, I forgot the exact number, maybe 70 banks are hooked up, which is maybe 60 or 70% of American consumers, but we want it to be 100%. And the more you have hooked up, the more valuable it is to everybody else. So we should have done it sooner. I'm mad we didn't, but we did. We punished ourselves, we moved on, and all the banks collaborated to get that done.